Did it get you? Were you scared? Were you scared? Were you freaking out when the price dropped the other day? A little nerve wracking. Not gonna say, there's zero emotion attached, but it's kind of hard to watch the price plummet like that, isn't it? But I actually posted in the Facebook group and on Twitter about it as well that like the entire concept of discipline, the entire concept of patience is really just an easy thing to say until we're really given an opportunity, like yesterday, to be like, okay, what was the thesis on this again? Why was I long? And is that still true? Has anything changed from the original analysis, the original belief I had about it? Has anything changed that should make me question maybe entering, exiting, whatever, right? And the reality is, when we get these opportunities, this is what makes people good investors. This is ultimately what makes you stronger as an investor. It makes you, if you want to be a trader, it's definitely what makes you a trader. Not really what I would suggest trying to do, become a trader, that is, but definitely can be nerve wracking, right? And so hopefully you got an opportunity to take a deep breath and not panic. And I really hope you didn't sell yesterday, and I'm going to explain why. Because again, we've talked about this before, where if you're going to buy or sell anything and you happen to look at charts, which I'll pull up here in a second, we buy the candles that are red, meaning the price is going down, right? We literally have to do the opposite of what the general public, right, what we call retail investors, what they do. Whatever retail investors do is emotion driven. And if we do the opposite of emotion driven decisions, we typically will be in profit. It's just how the markets work, and it's what the charts that I show you with the reds and green candles, the red and green candles, those are simply representation of the aggregate of all human emotion in the market. And so if everyone's freaking out, I want to be buying. And if everyone thinks it's going to go to $10 bajillion, cool, I'm going to sell it to them. And I'm going to be willing to really miss out on whatever that freaky high number is, because it's unstable. And much like a relationship with a friend, if they were very, very unstable, if you had a really unstable relationship, you're probably not going to try to get closer to them. You're probably going to try to distance yourself from them, right? Because an unstable environment isn't really inhabitable in the long term. And it's definitely not like good for your mental health. So let's jump into the charts and let's kind of take a look at what the heck is going on here. Really, we have a couple of different things. The first thing is, let's just take a look at the price action. Oh, I have it on. Well, that's okay. I guess I'll share it with everybody. We have a really, really big sell-off. Went all the way up to 92,000, and then obviously sold off, filling this wick right here. Kind of coming all the way down to a low of today was $76,555. You can see again by looking at these tiny little numbers up here, by hovering over the candle here on the chart trading view. And really, this is the primary thesis that I had, that I've been sharing pretty much this entire time, which is this is kind of a magnet that pulls the price towards it. And if we don't stop there, then these orange lines are going to continue to be the strongest levels of support. And so when we take a look at this and we see this much price action, first of all, if Bitcoin fell this much, all the altcoins fell like really, really, really hard. I really have two orders placed. I had originally had one here, but I canceled it just below this kind of consolidation area. I canceled it because my theory was, if it's going to hit this level, this is very minor support, it's going to go down. So you can already see I accidentally put it on here, but I actually had one of my orders fill at 77,635. That's pretty freaking good, knowing that it went down to 76. So less than $1,000 from the bottom. Pat myself on the back for that. But it really wasn't about picking the number. It was about this box right here that is, we call the CME gap. And again, the CME is the Chicago Mercantile Exchange. And this is basically what happens on the weekends when price moves. And I figured that if we're going to come down here and fill it, we didn't quite fill it here. Really didn't quite fill it, which is fine. Like, this was a great entry point. But I really had planned on shorting a little bit more up here. We actually did not make it to my number. Like, we were super, super close. I was trying to get on that side of the 50-day, of that purple line. I thought I'd enter right here and short it, and boy, that would have been sweet. But I did not get filled, so I'm out on that one. And so what I did on the other side is I simply said, with this not getting filled, I'm going to place an order just under, because chances are a lot of stop losses are under here, where the exchanges can really kind of take advantage of really what you're doing. You're saying, I think it's going to only go down to 77. That's the quote unquote bottom. And so I'll put my stop loss at, say, 76.5, because that way if it goes, that low, it'll probably keep going and I'll get stopped out. I'll take a tiny little loss and then I'll get to buy more when it's lower. Well, that's public information, stop losses are. And so when you put that out there in what's called the order book, the market makers can see that, the exchanges can see that. And when those start to aggregate a lot, man, price wants to move and fill all that liquidity up. And so long story short is I decided I'm going to go ahead and get in right underneath. And it's a really good example of, did I time the exact bottom at 76.5 something? No, I didn't. But is this good enough? And if it goes back to 100K, is 77.6 good enough? Or am I going to be upset that I didn't do it at 77.5? No, I'm not going to care, right? Most importantly, this is the lowest risk entry for the time, right? Is any little small area underneath wherever the low was, that's where all the stop losses are. And wherever the stop losses are, that's where I typically want to be buying. And so I have that. And then if you really want to know my other area, let's go ahead and share my second thing. I've already talked about these 3 lines, and I think it's going to come down here potentially, although I will share one major reason why it may not. Outside of the fact that everybody thinks it's going to come back down here. Since November of 2024, people have been saying, hey, this is going to be a support, which is true. It may not come back down here for the sole reason of everybody saying it, which means there's not going to be enough selling pressure. But I decided that if it does come back down here, I really don't think there's enough kind of like resistance here in these little tiny wicks to really justify a stopping point. I think it's going to come down and probably tag closer to this middle line at 71 something. And so I actually, which I typically don't do this, but I actually have an order set for $72,000, even like lots of zeros. My preference when I place orders is, let's say 72,000 is the number that I think it's going to go to. I would do like 72,435, like some obscure number, because people really like round numbers. And so whatever I think the round number is, I go on either side of that depending on really what the kind of the direction it's going, obviously. And that served me kind of well. Now, a good example where it didn't serve me well is when the markets actually just went up. Like I said, I was trying to short the market. It literally went all the way up to 95,128. Which, guess what? 95,000, super round number. I just happened to be a little bit higher, right? Just a little bit higher. I think it was like 250 or something like that. 95,250, which again is a little bit of a round number, but didn't really serve me that well. If it was, and I'd have to go look, it's obviously been a few days, but the bottom line is I know I didn't get filled because I would have a short position. That's really freaking sweet. So let's take a look at a couple of things. Number one, the CME gap that I keep talking about. If we go over here to the CME chart, there's a couple of things that happen. We've been talking about it since it happened back here in November. Obviously, it ran up. A lot of the Trump news with the strategic reserve, all that kind of stuff. It's really more just a kind of a bummer. Really not. It was made out to be, hey, this is going to be huge. But I think kind of as they started getting closer to it, and probably more importantly, as we started processing, yeah, but actually, how is that going to happen? When people started realizing that not much is going to occur right now, obviously that creates a lot of selling pressure. And so our CME gap right here, this actually got filled. So let me go ahead and just change that real fast, and I'll make it a little bit negative. That is not what we wanted, Brian. Come on, do something right. Here we go. Good enough. Now it kind of looks like it blends in. And obviously we kind of created these on the way down, right? Big gaps in the markets. Again, this is when, just as a reminder, this is a Friday and this is a Monday. So crypto being 24/7, there's 2 days in here that nothing, like this market isn't open. And so what happens is the day ends here and it starts here and creates this big gap, and we have to fill that gap. And you can see that we came down, we fully filled this gap, we came back up, and we're in the process of filling this gap that was just created on March 8th and March 9th by having a lot of selling pressure over the weekend. Now, this isn't a big deal. It'll probably get filled. And I'll explain kind of my theory behind that. And it's solely because this new gap is a very minor thing compared to These right here, right? We're in between gaps. We're in between price action. It's going to get filled eventually. Whether we come all the way down, it eventually goes up, or we go up and we come back down. Like, it's just not that big of a deal. And so the other thing that I'm looking at outside of that, and probably actually, let me go to the more important thing first, is really when we look at what's going on in the market, right? Because if I'm being super just blunt about it, I get text messages, I get Facebook messages, I get comments about, hey, should I sell? Hey, is now the time? And when do they do that? People message me when the price drops out of the sky, hey, should I be getting out? And when it goes up really, really high, hey, should I be buying? Just flip it. Literally just flip it. Do the opposite of probably what you think you are wanting to do emotionally. And you'll find if you'll just track that without ever buying anything, just if you had the discipline to just practice that, write down, hey, I think the price is really, really great to buy. Write down sell and write the price down, and then come back a month later and see if you would be in profit. You know what I mean? It's just that kind of silly. But I'm telling you, it's all just human emotion. And so one of the things that we look at is patterns, right? And when prices fall this hard, it's not a bad thing to question, should I be selling? Should I be buying? Great. Like there's no problem with that. It's the why, right? Did my thesis change? Is what I'm doing, is something going on with Bitcoin today that is different in the past? And the answer is no. And if you look at this, outside of just studying the fundamentals of it and the technicals of it, we are seeing a very consistent theme. Like look over here, look literally back in the past. See this purple line? Pretty much once we kind of get on top of it, we pretty much stay on top of it. And when we break it, we have a bear market. It's kind of how it works, except for deviations like this. This was COVID, and it, like, let's be honest, let's be transparent with ourselves. Like, we don't want to be right, we want to be rich, right? So it's not about being prideful and making sure we nail this thing so that we can tell all the friends how much money we made. No, I don't care how I feel at the end of the day as long as that bank account number is higher, right? And so when I really dig into these numbers, I want to look at the trends. And this right here is saying a bear market. Cool. What causes that is not only do we go under it, we kind of consolidate under it for a while and then we sell off. Cool, that's fine. That's one of the things I look for in a bear market, and that means I did miss a lot of the top. But what are we seeing? We're seeing a constant theme of we're staying above it right here. We came down, we pierced this on a weekly basis, and we came back up. We pierced it, came back up. Guys, I've been saying it for weeks that we're getting overextended. We have to find a way to kind of really reset things, really rebalance. And what does that mean? We got to come back down to this level. Now, for those who follow me on TradingView, I don't know that many of you do, but in the event that you did, I published an article last week talking about Bitcoin's biggest weekly close really since September 2024. And it's very, very short, just simply pointing out that this candle, now this was on, I don't know what day it was, 4 days ago. So like Thursday, Friday, I don't know. Before the weekend, obviously. Oh, right here. No, I'm weekly now. It doesn't matter. You can go look it up. It's published. I can't change it, so it is what it is. I was just saying that if this candle right here came back up to this white line, what do you see? You see that all the candle bodies closed above this white line, and it would only be wicks below it. That would be the most bullish thing. And I said it's not about the president having a crypto summit, which he did on Friday, which is like a snooze fest. It's not about the strategic Bitcoin reserve. Those aren't the biggest things in crypto for the price. The biggest thing for the price would be for the price to get back up there. And then I said, literally, if it doesn't, let's check this out right here. A close above would continue the trend, but failure to close this week above 93,500 could lead to a retest of the 50-week exponential moving average, which is if you take 50 of these candles, which represent a week in this case, and you put an aggregate together at the end of the day, the closing price, and you average that out, that would create this trend line that is purple. This would align with 100% fill of the CME gap that was created in November 2024 and the 50-week EMA. And so if I go back over to my chart here, what do we see? We see literally that exact same thing happening. We have not only the full 100% fill of the CME gap, but we have the consistent theme of we're going to revisit this 50-week moving average, not the 50-day, but the 50-week. And this is a moving target. So literally next week, I have no idea where this purple line is going to be next week. I can guess it's going to be in this area, right? Not a shocker, but I don't exactly know the real number. And when we're having big sell-off events like this, and I'm trying to project out several weeks in advance, I'm looking just for confluence. And that's why I'm not trying to get it right around the purple line. I'm trying to get close to it if I can, because I think it's going to revisit it. But where's my lowest risk? My lowest risk, I think, is here, because that's 2 data points that I can rely on. I have the gap that's being filled, and then I also have this box that's being filled as well. And so that's that kind of story. In other news, for those who are just super curious, let me see if I can pull it up here. I actually published a couple of pieces of my research as well on TradingView. Look at this, 2 followers. Man, I'm killing it. Oh, man, I am crushing this, you guys. So many followers, so many followers. But I literally posted these. In fact, I'll go put these in the I'll go ahead and dump them in the Facebook group, the private Facebook group, so you guys have those. But really, this is a really good published post, I think, if I do say so myself, about really that the highest price of Bitcoin isn't what's important; it's about when. And so I encourage you all to read that. This was another research project I did based on what's called the 30-week cycle low theory, and why I think it is basically not inaccurate, but it is misleading. And so how do we take the data that is there? How do we apply more data points to make it more accurate? And then what does that look like? And so really, when we come back into the charts here, let's see, what else did I want to cover? Bitcoin dominance. Okay, so actually, before I do that, everyone's already thinking in their head, well, Brian, is it going to go up or is it going to go down? Here's what I think. I think there's enough confluence that, obviously, that's why I put my buy orders there. There's enough confluence to say we're going to stop here. Now, 2 things. If they announce a recession, which could happen, obviously we could kind of see a pretty big deviation. Who really knows where that could go? I think that's going to stay at the top of the range up here, or we could revisit the bottom of the range if something terrible happened, like, hey, the economy's crashing and terrible, terrible things are happening. Also, if we look at this white line that I clearly drew on super boldly for some reason, we have a connection point here from the lows. We have these lows. And so if we're going to have a catastrophic low, really, where would that be if it was to come down? It's probably going to cascade its way down over here somewhere. That'd be in the 50s. Man, that'd be painful to some extent, but it'd be so sick to be able to buy Bitcoin at $55,000 again. Because if it crashed down that low that fast, man, look what happened the last time that happened. Look at the COVID thing. Bam, this 1 week, holy cow, buying anywhere in here, dude, you easily doubled your money in a matter of a month. Like, it's unbelievable. So I don't think that's the likelihood. We have to see a lot more things happening, in my opinion, from that. For example, number 1, I got to see a close below this 50-week EMA, and I got to see it probably juggle a little bit under it. And if I see it consolidate under it, I'm going to have to make some decisions to protect the investment, whether that means selling and trying to trade down, which most of us aren't traders, or whether that means I simply add short positions so that I equalize the loss I'm taking here by holding it. I can be gaining money by shorting the asset itself. But again, that's probably not a conversation for this group. So last thing on Bitcoin real quick is kind of jumping over the dominance. I really kind of looked at this. We've talked about this several times, that this is all the money in crypto that is specifically in Bitcoin. And out of all the money in Bitcoin, out of all the money in the cryptocurrency space, 62% of it is in Bitcoin. And really what you see is these kind of areas being the major resistance. We could see some potentially very, very big highs up here. And again, they really peak when the markets crash. That's what's fascinating. And that's where we could see those high things. But statistically, what we're looking at are these ranges. This big wick up here causes a little bit of an imbalance. I don't know that we'll capture all of it, but I do think that probably by the end of March, we will see it kind of top out for Bitcoin, especially because altcoins have been hurt so much. I think Bitcoin's going to kind of top out a little bit. Not that the price moves, but the amount of money moving into Bitcoin. And then the money will move from Bitcoin and go into the altcoins, which means the dominance will go down. And that could give us an opportunity for an altcoin season. We'll see if that happens. This is a very difficult thing to predict, in my opinion. There's a couple of data analysts or research scientists, those kind of people that spend a lot of time on dominance, and my brain just kind of it just hurts when I am done talking to those people or listening to those people, because they're using phrases that are like, I don't even know what that is. I don't even know that I can Google that. And so, long story short, with dominance kind of peaking like this, I really kind of feel like that probably means, with all this money moving into Bitcoin, that is a argument for why Bitcoin stabilization will probably happen. Right? When the Bitcoin dominance tanks, what's not going to happen is the price won't necessarily tank. It's just that the money moves. So we might see consolidation sideways. We might see it dip down a little bit, but I don't foresee it really going down super far. Where Bitcoin's going to come down below these, whatever this lowest level is, 69,000. And if it does, it's going to be a very quick wick. And so I want to see a lot more data points that says it's going to go lower. But as you know, I have two things in place that really kind of, or I have one thing in place left because this one already got filled. I have my $72,000 order, and I'll be very happy if that gets filled because I think if it does, it'll hit and then it'll probably go back up, and we'll see. And I could be wrong. We could consolidate around here. There's a lot of things that could happen. CPI data is announced tomorrow on the 12th, so that could bring a lot of volatility as well. And go from there. Another thing that I'm looking at that could be a why are we entertaining these lower levels would be the S&P 500, which I've mentioned in a few videos. We're in this range where 6,000, 6,100 seems to be kind of an area that we're topping out at, and so we should see a little bit of a reversal. As you can see, we've already hit that reversal. What did it go up to? It went up to 61.45. So I guess at the time of drawing all this, whenever that was, back in December, it looks like, we are experiencing some consolidation, and now we're finally experiencing that sell-off. Now, failure to hold this 50-week exponential moving average is going to make me have a lot more question about the U.S. economy and a recession and all those conversations. Most likely support's probably like the top of this, but it obviously could go down and have a 30% retracement if we're going to have like a really bad recession. And keep in mind, I don't care what book you read. I don't care how much you research Bitcoin. If you really think that Bitcoin's going to skyrocket if the economy crashes, it most likely isn't. It could if something happens to the U.S. dollar or there's an announcement about the U.S. dollar, but that ain't gonna happen in my opinion. It's okay to see drops, to experience sell-offs. I think that with quantitative easing and the ability to print money, they're getting less and less and less harsh, and so our recessions will look a little not as painful, solely because when the government starts to print money, right, in basic terms, when they start printing money, that is an inflationary act. All that money is eroding the purchasing power of the dollar. Instead of buying an apple for $1 or whatever, just as an example, now it takes me $2 to buy the same apple. It takes more of the paper to buy the exact same thing. An apple has been an apple since apples were created, and everybody knows that. The only thing that's changing is the purchasing power of the US dollar. And that's why you could build an entire house for like $7,000 150 years ago, right? Maybe not even that long ago. And so as that, dollar starts to weaken, things could potentially change. But with it weakening, now it takes more dollars to buy that stock, to buy that asset, which means the price of that asset is inflationary. It's going to go up. We saw this especially in 2020 during the COVID. We had this big thing. It caused a massive inflationary event. It happened. All the printing stopped. What happens? Well, then obviously everybody wants to take their profits and get out. So we have a sell-off after the print, and the cycle continues. So that's really it for me right now. I think that, kind of looking at the situation, we are still in a very healthy range. I will give you two more pieces of data really quick so you have them. Just a quick reminder that it is very common to experience a 30% sell-off when we are going up. Right? I've already mapped all these out in other videos, so I won't go do it again. But it goes up, it pulls back, it goes up, it pulls back, it goes up, pulls back. That is a normal thing. The only other thing that I did look at today that I was like, ooh, I got to know is I really wanted to know, guys, how much below the 50 did it actually go? Did this really wick down? And so if I was to do this, ballparking it, let's call it 8%, 7 to 8% below the 50-week moving average. So if I was to come back in here and I was to say, all right, wow, what am I doing? And I was to say, all right, let's say it is. Let's say the 50-week comes up to whatever, one more notch up, like here. And then it freaks everybody out having one really big last final hurrah. That's going to put me, oh, come on, guy. That's going to put me where? Well, that's 9%, 8%, somewhere in there. That'd be 71. Well, guess what? That giant sell-off that was over here that scared everybody would essentially lead us back into the area that we've been saying is the strongest support since it exited that level. And that just adds more confluence to the theory that even a big sell-off will most likely not be catastrophic. With the one disclaimer, as I continue to say, in not only just videos and posts, but just verbally too, that like a recession changes everything, because the amount of fear that happens when the economy is tanking, or if a lot of people lost their jobs, or things like, look, you're selling. That's just what you're doing. You're selling, you're cashing out, you're getting into dollars because it's the safe haven asset that we know of, and that's kind of how this whole thing works. Regardless of what your view is on, Austrian economics or any of that kind of stuff, right? If what you know is I need dollars to buy groceries, you will sell things to get dollars, regardless of the purchasing power. And so it will happen. And that's where it's like there's zero way to really kind of understand what is that going to look like? And I think COVID was the perfect test. It was the perfect test to show us that, and I'll just map it out for you really quick. From the midline, from the 50-week moving average, it sold off 50%. From there, 50%, freaking everybody in the world out. And then obviously, huge gains from there. So anyway, I hope that helps. I will publish this on YouTube, and I'll throw some of these links to the other research I've done in the chat. And as I publish more articles and stuff with TradingView, I'll send them over as well. Hope you're having a great day, and I hope you didn't sell your Bitcoin. I do think that we are really close to a bottom, if not a bottom. And I also think that because all the altcoins have just been demolished, and so people who are there that many more sellers left, right? So we'll see. Hang in there. It's just another day. All right, it's just another day. And I think I posted it on Twitter, or X, sorry, you loyal Twitter people. But this conversation we will have again. And it's probably going to be when Bitcoin is like 125,000. It will go up to like 150, 180,000. And then it will sell off and have this huge sell-off event. Oh my gosh, it's crashing. And then at like 125,000, we'll revisit this whole conversation. We'll talk about how, look at all the support. I think we're in a good spot. Let's keep going along with the trend until the trend breaks, which will be, I think, probably later this year. And that's when we're going to start that bear market. And we start the whole 4-year cycle all over again. And that is what I love about Bitcoin, is that it has that prediction. So have a great day. Stay good. Take care of yourself. See ya.